So let's make a quick video about a principle that has served me really well in investing and business. It's called the STAR principle. And I came to this idea for this video based on the comment I got from a recent video about investing in NVIDIA. And the commenter, Sapphire4813, loyal Finxter member, asked me, do you also invest in AMD as a GPU maker, as a future competitor for NVIDIA? And yeah, because it might become a dangerous competitor to NVIDIA. He also asked about Google TPU. And my response was, I only invest in star businesses. Check out Richard Koch's book, The Star Principle, How It Will Make You Rich. Star business is a leader in a high growth market. And so what does it mean concretely? So here we have two-dimensional space, right? So these are the x-axis and the y-axis. The y-axis is a percentage growth of the industry. So say for instance AI chips has a high percentage growth. So everything here will be like say plus 10%, right? So we have like 10% growth rate on this point here, and then maybe we have 0% growth rate here of the industry, right? And then some industries we have negative growth rate. So you definitely want to be in a business that is in an industry that grows at least 10%. So everything above this line is okay, right? Here we might have something like 100% growth of the industry per year. There are many such industries, right? And one of the industries that has say 50 to 70% growth or so is the AI chip industry. So NVIDIA, based on this, is somewhere in this range if you look only on the y-axis. Now, what does the x-axis mean? The x-axis basically means the percentage market share. So if you have a high market share, you are, so say you have a 20, maybe, so relatively, if your market share is twice as big as a competitor, you are more on this side, on the left side of the, or yeah, I don't know if video how it comes out. You want to have a high market share relative to all other players. So let's have a look at the business. Let's maybe remove everything here. So let's look at the AI market. So we have at least 10% growth, right? So we have say 70% growth of the market. That's why we are already like in star terra. But then also we have different competitors, like NVIDIA is the leading company in the space, right? So NVIDIA might be somewhere here at this point. Whereas AMD has, so they have the biggest market share. I don't know exactly how much, but maybe say 30% market share. And then we have AMD. I don't know the market share, it's just an estimation, but it's clear that NVIDIA is has the highest market share. Okay, then we have others like AMD, Intel, then we have Google TPU, and all the other players, right? That might have like relatively high growth rate, but they are also like all of them are in the same growth industry. So what we want is a company that is growing fast and that is currently leading. And we map them into the space, and then we take like the left top company, and the left top company is NVIDIA. And I only invest in these type of companies. This is based on the book like the Star Principle by Richard Koch. I don't know him personally, but it's a great book, recommended read. It looks like this with the subtitle, bold subtitle, How It Can Make You Rich. He also only invested in in these star businesses. And there are many star businesses. So if you ask ChatGPT, what are some star businesses? So this is a common, use the star principle. So star principle developed by Richard Koch identifies star businesses as those that operate in high growth markets and hold a dominant position in their market segment. These businesses exhibit rapid growth and substantial profitability due to their market leadership and the expansive potential of the industry they operate in. And maybe here we have this star business quadrant that you might know. So here this Boston Consulting Group growth share metrics, where you have a business with high growth and high market share is a star. A business with low growth and high market share is a cash cow. It creates huge amounts of cash. Why? Because the biggest company in a low growth market usually has less competition, so they can increase prices, create a lot of cash. They don't need to care so much about growth anymore. Their market is already mature, and they have, because it doesn't grow anymore, the market is already mature, and they can just throw a lot of cash at the investors. And but you don't get any internal growth kind of from the company, right? A mature market might be something like the steel market or real estate market and so on, right? The biggest companies there that have a high market share, they generate a lot of cash, but they don't have great ways to deploy that cash. Whereas a business in a high growth, high market share area would be NVIDIA or Tesla or even Google in the search market, or even probably search market not anymore because it doesn't grow anymore. But Google has different sub-segments that could be considered star businesses. Anyway, I think NVIDIA is a much clearer example here. And Tesla as well. Why Tesla? Because they are in the AI self-driving market, it is growing rapidly, or the humanoid robot market, they are growing rapidly. Even the electric vehicle market and autonomous vehicle market are fast growth businesses. They grow faster than, say, 10% per year over long periods of time. The average growth rate is much higher. And those are the leading companies, right? And you want to invest in either stars or cash cows, but never in pets or question marks. So what does it mean? It means that you would invest in companies that currently are or have the very strong probability to become a leader in their industry. If you have a cash cow, probably it would be best to sell the cash cow or use the cash at least to invest in star businesses. You don't want to invest in question marks because question marks have low market share, and usually the company that has a higher market share has better operating leverage, so they can invest more into each unit they sell, more fixed cost, for instance, research and development. As they sell more units, they are the leader in the high growth market, right? So that's why, for instance, Apple is the leader in the smartphone market. They have they sell a lot of units, they sell a lot of volume in terms of sales, dollars, and they have a lot of experience, and due to their data lead and so on, they can iterate better, they can learn more, and you as a new fresh company, you would struggle competing with a player such as Apple. It would be really difficult. So if you would start a business in the smartphone industry, you would be a question mark or a pet, like a dog or so, right? With low growth, low market share, or even if you have higher growth but you have a low market share, still it's a question mark. Still, I mean, if somebody outgrows you, or maybe somebody is already the leader, it is very difficult to compete with them. So stars are considered to be strategically important for several reasons. They have the potential to generate substantial revenues and profits due to their strong market position and the growth opportunities present in their industry. They often require significant investment to sustain their growth, and that's why they often are not profitable. For instance, Amazon was a star business, when it was just growing rapidly. And at the time it was a star business, it was not profitable. So sometimes a star business is not yet profitable because they use all their excess cash for growth, which is also the best use of their excess cash. Because for a star business, it's important to grow faster than any other business. Yeah, so I think I made the point here, but let's consider a few questions that would be relevant for you as an investor or as an individual, right? What is a star business? A star business operates in a high growth market that grows at least 10% per year and is a leader in that market. What determines the success? Your success generally, your success would be determined by not how smart you are, but how good your environment is. It's not about ability, hard work, and so on. It's about being in a position where you being in an environment that grows rapidly and that is good for your own growth and prosperity, right? And that's why many of the early Google employees are rich, even though they don't have a higher IQ than you might have, right? They just have been at the right point and at the right time. And what does leadership in the market niche mean? If you want to be a leader, you need to be bigger in terms of sales than any other company. So it's pretty easy to determine a leader in the market in a certain industry, right? And that's why I only first, if I want to invest in an industry, I just look at the leader and I just invest in the leader. Very simple. Most industries have winner takes most dynamics, and it's a very robust strategy because the leader usually stays a leader for many reasons. We should not discuss all of those reasons here. So if you have the ranking of competitors is different in a wallet market niche, the leader in the niche is different from the leader in the main market. So you might also have industries or small niches where they have their own star dynamics, right? Because those niches might be, so for instance, if you have the online retail niche, then Amazon might be the leader also. But if you look at the smaller niche, for instance, selling digital products or so, then another company like Shopify might be the leader in that niche of the overall market. But it's usually still possible to determine the leader with a bit of research. What does high growth mean? High growth means more than 10% per year, right? If you can compound your capital at more than 10% per year, it's already great. What makes a star business attractive? It's a combination of niche leaderships and high niche growth. A leading firm has higher prices or lower costs than others, and this is what makes it highly profitable and valuable. What are the pitfalls of a star business? I mean, you can lose leadership in a niche and then it would lose a lot of value or most of the value. So if you invest in a star business like NVIDIA, and NVIDIA would lose the leadership, then you would lose a lot of money, right? That's why I would still use some diversification. How rare are stars? Stars are 1 in 20 startups or so, and so one I would say 1 in 20 is a 5% chance or so to find a star business if you just pick randomly. And you can use tools like Finxter or so and here go to valuation, rank by sales in the past 5 years in descending order, and then you see, okay, all of them have seen significant growth, and if you can just go over the list, you might find a few companies in their industry. Obviously, you need to know something about the industry, do some research as well, but this is how one can find high growth companies, for instance, as an example. Also, it can be done more top down, right? Determine the niche, for instance, AI chips, a niche where you know that has high growth, and then just do some research to determine the leader of this niche. This would be a more bottom-up approach where you look at a certain company and then you determine why this company is actually growing that quickly. So basically, what is the power of the star idea? The power is most businesses that have actually made people rich are star businesses. Google, Amazon, Netscape, eBay, Yahoo, Skype, Microsoft, Amgen, Intel, US Steel, Ford, Coca-Cola, McDonald's, Walmart, Dubai, even as a environment mall. All of those have been star businesses for a certain period of time. Bitcoin, MicroStrategy, also in different areas. You see, even in the cryptocurrency space, it's always about the leader in a high growth niche. Who should be involved with stars in their life? Everyone. If you want to work or aim to work in a star business, if you want to be a founder or entrepreneur, start a star business. If you want to invest in a star business. So it's like for employees, it's for founders or business owners, it's for investors as well. If you want to create a viable niche, there should be a gap in the market and a profitable market in the gap, right? So you need to find the gap, and then you need to find a profitable way to exploit the gap, and then you need to grow faster than everybody else in your environment. And that's why also star businesses usually don't have a lot of profit if they are in the growth phase, because they reinvest all their profits into the business. Okay, what else can we discuss? What are some triggers you could use to create your star idea or niche? So your ideal product doesn't exist. If the product doesn't exist, then you might want to create it, right? You can go up market or down market. For instance, you could look at a certain market and ask yourself, could you create a luxury segment of this, or even a more affordable version of this, if you want to do the cheaper thing, right? Go up market or down market. You can go mass market versus niche, right? If you have a successful niche product, you might be able to go mass market. If you have a mass market product, such like a certain battery or so, you might want to go niche, for instance, battery for XYZ, for your house or something, yeah, which would be going niche. And you can become the biggest company in the niche. You can have a bigger or a smaller product. So say you have a computer, now you can create a smaller computer. Or if you have a small computer, you can create a huge machine that is very powerful for home, maybe a bit cheaper or so, having other differentiations. You can go emotional versus functional. So for instance, emotional might be warm and expensive. Functional is no nonsense, rational, inexpensive, stripped down to the essentials, right? And this works for all categories. It can be healthier versus tempting, so long-term versus short-term gratification. It can be safe versus racy, convenience versus purity, saving time versus extending time. Like saving time would be like a certain notebook or so, or calendar app, or an AI application. And it could be it can also extend time, like for instance entertainment could be something. You can target certain groups, like only gay people or so, right? If you have a certain Bible, you can create a Bible for gay people, for instance, and satisfy these unique needs of certain groups. You can, there are different ways to find your product, or to figure out a niche that you can then dominate, and it needs to be a high growth niche. Okay, so I think these are some basic thoughts, basic considerations. If you look at any star business, like the NVIDIA stock, it looks like this. Tesla stock, all of these businesses look like this because they have been growth businesses. They have been star businesses for a certain period of time. And usually the problem arises if they stop being stars. And the question is, for instance, with Tesla, if it can remain a star in the electric vehicle industry, or if the industry itself is not growing anymore. I don't think this is the case, but some people like Tesla lose interest in Tesla because they believe the industry is not a growing industry anymore. They still might believe in Tesla, but they believe, okay, electric vehicles are not the future after all. Again, this is not my belief, but it's definitely possible that the niche might change. And with changing environments, we need to adapt our assumptions, because the star principle, once again, it's about, again, the growth and the market share. Both must be true. So you want high growth and high market share. Only if you have both, you should invest in a business. You should not invest in a low growth business with high market share. You should not invest in a low growth business with low market share, like the random startup. No, you should not invest in the low growth business at all, right? Using the star principle, no investment advice. And you should not invest in a high growth business if it has low market share, because usually they will fail as well. The only company worth investing after this principle is a star business in a high growth and high market share environment. Okay, I think that summarizes the talk. Thanks for listening to this talk. If you want to learn more about investing and technology and stuff, then give me a like, subscribe. Nothing in this video is investment advice. I am not a financial advisor. I just am a former computer scientist, business owner, turned investor. Thanks for listening, and see you in the next video. Bye.